Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, November 26, 2021. I'm going to jump basically as soon as possible into the presentation, but we're going to cover stocks, bonds, Treasury bonds, oil, dollar, and Bitcoin. If you're a subscriber, then we will cover all of these securities in two different newsletters. So if you're not yet a member, sign up. So on this chart, we're seeing a chart of S&P 500. This is a weekly chart. Notice where I'm hovering, it says W. So on this chart also we're seeing four different lines, the green, blue, red, and yellow lines. So these are my proprietary support resistance indicator lines, and you can find out more about them by clicking the description of the video. Overall, the way I trade is we buy and close above the blue support resistance, we trail at the blue line itself, and when or if the blue line is hit again from the top, we're going to exit. This hasn't happened yet, and we're looking at close to 2 years of pretty strong uptrend. So perhaps this selling is, that's it. We're looking at the daily chart now, and you can kind of see a big red candlestick today. So that is not a great looking candlestick on daily. We can also zoom in on the weekly, and we can see that there's also not a great candlestick on the weekly. So this could be considered a bearish engulfing pattern, where today's candlestick or this week's candlestick completely engulfs the previous one. It can also be thought as an outside reversal, because you can see there is a little tail out of the top here, a shadow out of the top. It covers pretty much the entire previous candlestick, so that is an outside reversal. So we need to be on the lookout for a significant pullback. I am already letting my subscribers know that I would be taking profits basically at this time. If I had an open profitable position, I would consider taking profits, or perhaps when closing it altogether. Dow Jones, lost ground for the third week in a row. S&P didn't really lose ground last week, but Dow Jones was under pressure. Overall, correlations are very high between S&P. This is a correlation coefficient between S&P and Dow Jones. You can see they're basically 1-to-1. So if one goes, the other follows. Same goes for NASDAQ. So big weekly reversal candle. This is a clear bearish engulfing. The entire previous week's candlestick from 15th of November is engulfed by this week's candlestick, the big red candlestick. So overall, not a great looking chart. I would be considering taking profits if I had any open profitable positions, and definitely I don't really want to open any new ones at this time, but we will see. Again, there may or may not be yet a reason to panic. What bugs me the most, of course, is IWM, small cap, so big. We did hit records on the week of 8th of November, but we've been selling off. Looking at the daily chart of small caps, so it doesn't do it justice. You can kind of see this is a IWM, so this gap is just not visualized really well. But if we look at the Russell 2000 futures, Russell 2000 index, we can see a big red candlestick today. So again, notice how nicely sometimes the indicators act. It touched the support right there at 2218 or so, 2220, and closed above for now. But this candlestick it's not a great candlestick. So there's preponderance of downside pressure, of price pressure. So we may see Monday, continuation lower. Here's the same candle on the weekly time frame for Russell. Once again, you can see it touched the support resistance line. If you're going to be trading on the weekly chart, so make sure that you're going to change the setting to 52 on my charts, on my indicators. if you're trading on daily or smaller, for example hourly, then I usually keep the settings as 250. If you're gonna trade hourly or smaller, then make sure your security that you're trading is not a stock, but a continuous instrument. So I'll give you also, here's IWM and daily charts, but let's go to 1 hour, for example. So notice this big gap here, and this throws off the calculation. So you do not want to be doing day trading using stock, using my indicators. However, you can do day trading if you are trading, for example, Forex, using my indicators. So here's, for example, Bitcoin, and you can see it. There are no gaps. It continues. So again, continuous instruments for intraday trading, non-continuous instruments for daily or higher, if you're going to be using my indicators. Okay, so moving on to the junk debt. So here's junk debt. If you listen to my previous videos, I was concerned about this narrowing of a trading range. So notice how far the different distances between yellow and the green line here. It was for almost 5 points, as early as September, and then just recently you can see the distance was 2 points, so it's more than halved. So what does that mean? If we look closely, okay, we see that we're still in a bull market as early as here in early November, but then we kind of continued lower, and this was a big red flag for me here on 19th of November, and this was caution. So I usually send out to my subscribers caution. So if we close below this red line, it means we need to be very ready to just get out. And then here on the 24th of November, we're seeing a close below this yellow line, and this is just a void. That means we need to run away. So notice again that this, you can look at a weekly chart as well. Just the way this indicators got so narrow, you can clearly visualize it, how far apart they were, and they got progressively more and more close together, and now we're switching into the bear market. So junk debt is now in a bear market. Here again, we're going to look at correlations of junk debt, high yield bonds to S&P 500. So again, down below here is I have correlation coefficient, and usually you can see it spends most of its time in the positive territory. Occasionally we get negative territory, and right this instant this was happening. But by and large, you can see that over the long term, junk debt correlates highly to S&P. So what I'm worried about is junk debt was like a first canary in the coal mine, and S&P is just a few days to weeks away from also dropping significantly. So we need to be cognizant of that. Now additionally, we're seeing a strong buy-in in TLT, the Treasury. So this is as classic as it gets. When treasuries rally, stocks are under pressure, junk debt is under pressure. This is classic flight to safety, kind of reaction. So looking at daily charts for treasuries, TLT, again, notice the way the indicators are curving down towards price action. I bought some TLT today myself, and we'll see how it goes. So again, I'm doing basically what my indicators are telling me, and they're telling me right now to be more defensive. And so I'm kind of lightening up my stock position portfolios, and or the stock positions in my portfolio, and I'm adding the treasury bonds to counterbalance any sort of potential drop in stocks, and also maybe even make some money on the upside for treasuries. Oil, again, look at the size of this thing. So this is by far the biggest candle I'm seeing. This is a daily chart. This is the biggest candle I'm seeing since, a while back, since April of 2020. So it sure looks really terrible. So we can look at weekly chart. Weekly charts are, we broke this blue line. We broke the blue support resistance line. So now we're in a critical really phase to see if oil will stop and rally from here. And if it closes above the blue line, then I'll consider buying it again. However, unfortunately, if we get down to about 59 or so, we are going to most likely see oil come under further pressure and most likely get into the upper 40s. So we're watching two levels. So the first level was definitely already breached. Now we need to look out for a level around 59. It's marked by the red line right there. And dollar, also dollar big rally. So still dollar is in the uptrend. We're seeing just possibly a pullback, profit taking, whatever you want to call it. So dollar rallied strongly. This is a shooting star candlestick today. This week, you can look on weekly. This is a shooting star candlestick. The wick at the top is longer than the bottom, and the real body is very small, so it's like a dodgy shooting star, whatever you want to call it. Not a great candlestick if you're a bull. However, if you trade gold, then you should be aware of what dollar is doing. Dollar and gold correlate negatively to one another, obviously, because gold is priced in dollars, and right this instant we're literally at support. So gold did break out, I thought so, here on November 11th. However, looks like that breakout could have been a failure. Now, if gold holds here, holds support at this level, 1792, where I'm reading it right off the chart, then it could rally and then maybe break out higher. But if it closes below this level, then I think we may see a continuation to the downside. Maybe we'll even take out these levels from August. So overall, not a very clear picture right now with dollar and gold. And Bitcoin, so Bitcoin currently landed exactly on this blue support resistance line. So let's watch it. Let's see what it does here. So before, you can see it, landed there and with a nice move. Very nice move here. Another opportunity on the 20th of August. So we'll see where this goes. Strong dollar, does it do something to Bitcoin? Possibly. We'll just watch it and see what happens for now. Alright, that's it for this week's recap. Head over to MasterChartsTrading.com. That's MasterChartsTrading.com. Click on products right there and sign up for one of the products. So I have these indicators, the trading indicators. They're $29 You can trade pretty much anything you want, and very easily and pretty obvious. If you want the indicators in the newsletter, where you get to hear my ideas about various stocks, such as large caps, ETFs, and various commodities and gold, also some of the speculative ideas, then sign up for the indicators and newsletter. And if you want ultimate bundle, it includes a stock screener, which lets you find stocks that are, for example, breaking out, or soon we might start looking for stocks that are breaking down, and then act accordingly. Once again, I'll just give you a little bit of heads up. We are working on a trading robot. So this robot is becoming more and more of a reality, and most likely within the next 2 months we will have a working prototype. It's going to be most likely on interactive brokers. So once the working prototype has been achieved, we will begin live testing with live money, then scale up the amount of money, and then once we're very sure that everything is working and as it should be, we will offer this is going to be API, this is going to be computer interface, and you will have, you open your own account in Interactive Brokers, let us know your credentials. We are not able to withdraw money, obviously. We are able to only trade your account. So this is a pretty common practice, and then once that happens, we will be able to offer this API for use by the subscribers. So this is just a heads up. Also, we have a new name, and it's coming up. I'll give more information once it becomes available. But for now, if you're interested, sign up, subscribe to our mailing list, or of course, subscribe to our products. So either one. All right, that's it for this week's recap. Again, if you have any questions, please let me know. Thanks for watching. Have another great trading week. Bye-bye.